everyone, and welcome to my morning report charts appraisals with me, Richard Perry, market analyst at Hantec Markets on Tuesday, the 14th of December. This dollar market has just rolled over, hasn't it? I mean, it took quite a big move to the downside yesterday on the back of a couple of factors, really. The inflation data in the afternoon, the CPI on a core reading basis, was disappointing. It dropped to 1.7% for the US. Now that sort of again reflects the continued pressures that I think the Fed is under, considering we're seeing inflation so subdued in the States. Yes, they're going forward ahead with their rate tightening cycle, as reflected in the Fed meeting last night, but inflation remains a really big issue and a really big problem for them to sort of push ahead in any real sort of pace with that. I mean, the market, I mean, the Fed is already going for, well, it's reiterated 3 hikes for next year. But in upgrading its growth forecast yesterday, it didn't upgrade its inflation forecast. So despite the fact that the US is looking at this massive tax reform bill going through, and potential growth implications of that, it doesn't really look as though the Fed is thinking that there's going to be an inflationary aspect to that. So subsequently, we're seeing yields in the States which subdued. Certainly yesterday, the 10-year yield fell back. It's bounced a little bit today, but it still remains a case that 2.4% is a big barrier, seemingly, for that 10-year yield. The 2-year yield fell quite sharply as well. Actually, on a technical basis, that's a big big key one-day reversal on the downside on the Treasury yields. So that's interesting as well. So is this the market sort of again questioning this this dollar rally that we've seen in recent couple of weeks? Has that now broken to the downside? The market, how the market treats this move from yesterday's move to the downside, whether it buys into that move or whether it starts to sort of sell into the rallies again, will be interesting. Today's little intraday rebound, or certainly settling of the dollar, how is the market going to react to that? I think that could be key. The reaction to this rebound could be key to the outlook for the near term, at least for the dollar. So in terms of your markets across the board, you've got a fairly settled look to Forex. There's nothing too significant. I mean, the dollar is outperforming against the yen, underperforming against sterling. Aussie is an outperformer on the back of stronger than expected employment data in Australia. But generally speaking, we're sort of seeing sort of mixed middle of the road signals. But it's interesting that we did see the S&P 500 fell away into the close last night, closing at the day low. And that has sort of meant that indices in the European session and also Asia, but European session as well, just rolling over, struggling again. The DAX failing at that 13,200 area, rolling over. The FTSE rolling back a bit lower as well. So some interesting moves we're seeing on these equity markets. Is this another sort of signal to suggest that the market's going to just turn down a little bit? Now we've got quite a lot going on today. It's loads of central banks and also retail sales, but primarily we've got the Bank of England and the ECB. And the question would be, if are there going to be any moves? Well, the expectations is no. The Bank of England hiked interest rates by 25 basis points as it undid that emergency rate cut from last summer. That was last month. Market is expecting absolutely no change in the Bank of England rates decision today. Sort of scrolling down to it. Actually, that's not on. It's on the next page. Come on. There we go. Rate hike unchanged. 9 voting for unchanged. That will be also important. So. You've also got the ECB, and no change expected there, considering the ECB cut its asset purchases by 30 billion euros per month last time out. So aside from that, we've also got the retail sales data. You briefly may have seen it, but UK retail sales at 9:30 expected to rebound to plus 0.4. Or well, plus 0.3% on a year-on-year basis, having been negative 0.3 last month. Sorry, that's ex-fuel. Ex-fuel is plus 0.4. So yeah, that's at 9:30, and then you've got the US retail sales as well at 1:30 on an ex-autos basis is expected to climb by plus 0.6% on ex-autos. So yeah, you've got that at 130. So lots going on. Now my chart of the day is the Aussie dollar, which has been climbing quite strongly in the last couple of days. Certainly yesterday, obviously, with big strong bull candle breakout, and it's moved higher today on the employment data, and it's broken out above 76.55, which was a bit of a basis of resistance, and there was a bit of a pivot around sort of 76.20, and that's formed resistance 76.20 to 76.55. Now the interesting thing today will be whether this becomes a basis of support now. This sort of mini range of about 30-35 pips. And what you can see here on the hourly chart is it's unwound to 76.50 and bounced. So you've got this sort of near-term little range here, having broken out above all this sort of 76.20 to 76.50 area. That now becomes a basis of support, and that held on that initial move to the downside. Just unwinding a little bit on this hourly momentum as it's gone overboard, and it'll be interesting to see if the hourly momentum can now start to build above that sort of 40-50 area, which is where it's sort of unwound back to in recent days and to find support. So 40 to 50 is, 45 to 50 is where that support starts to come in for the hourly RSI. You've got the MACD lines, which yes have crossed a bit lower, so maybe you can wait to see a bit of a drop back into this support zone, and the treatment of that support zone I think will be key. 76 figure has also been a level, so watch out for that on the downside. So a close back below 76.20 would be sort of a bit of a disappointment now for the Aussie dollar, considering the rally it's had to 76.75, which is initial resistance. But if that rally can continue and close back above 76.55 today, then I think we're going to see further move to the upside towards 77.30, possibly in due course, as this little rally continues. You can see the RSI has broken up, broken the downtrend. The MACD lines have already broken the downtrend, as have the stochastics now. So the momentum is improving. You can sort of get a bit of a downtrend going on here as well that has also been broken. So yeah, some improvement in the Aussie dollar chart, and just needs to start to consolidate that move and then sort of build once more to the upside. So interesting moves today on the Aussie. So I wish you good luck in your trading, and I'll speak to you later. Thank you.